The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, the Friday edition, Friday the 26th of October, almost the end of the month, almost the end of the year. Amazing how time flies. Well, 2 great hours. I hope that I can add to that with a third hour, and then we get Nico DeHaan, all about health. Then we get Daryl Martin and Dave White, Ken Shreve. I think I heard Tom say that Daryl's going to be doing Ken's show. And then Tom O'Brien, 4 o'clock till 6. So fabulous programming all day. Here at TFNN.com, Dow is down 23, S&P is down 5. The comp index, where did that go? Let's see. The comp index right now is, move this away, give me a second. Oh, look at this chart. If you're looking at Tiger TV right now, you will see a chart. Boeing. I missed this because I was just busy trying to finish up the preparations for my all-day Master Trader Series Level 2 yesterday. That was really exciting. And 75 round number after the gap opening with Boeing. It opened at 74.95. It went 5 cents higher. We were discussing it yesterday during the Master Trader Series that, I just wish I had seen it because that's the perfect time to put on a put position. Why? All it needed to do was go to 75.01, 6 cents higher than the open, instead of that round number, 75. And you're out. It was like 6 cents, and you're out. You can get short. And look what happened. It slumped. This is that rogue wave and a right arm extension. It's just potent if you can identify it. Anyway, let's go back to the numbers. So the comp index right now, move this aside so everybody can see. There we go. Okay. The comp index is at 29.76, down 9. Now, this is going to be interesting because I've still got a lot of weakness to come in the gold contract, the GLD. There could be bounces. I shouldn't say a lot. What I'm saying is that for a while, lower highs and lower lows. That's what I'm looking for. And then there'll be one moment where the dollar actually does break to the upside and gold comes down very sharply. That's kind of the way I'm looking at it. Everything about it says it should do that. We'll see if that's really going to be the issue. Silver's, let's see, so gold right now, I'm a little behind, but gold is down about 5 at 1707. More importantly, the GLD is up 17 cents, or maybe gold is doing a little bit better than that. It's at 166.19. We've got silver. Silver's up a tad at 32.25. Bonds are up 31.30 seconds at 147.23 30 to me, that my three bears, the 3 bears that I use as a kind of an index, that's VIXY, Bondi, and Dolly. The volatility index, the VIX, bonds via the TLT, and Dolly is the dollar. Those 3, let's just look at them now. I'm going to so I go to the white chart, should I go to the black chart? I'm really going back to the black charts. I just see it so much better. Let me see if I've updated. I don't want to get confused between updating here. So the dollar is at 80.03. That's the dollar index. The last high at peak E was 80.21. It hasn't broken above that yet. But if it holds here, it says that the 200 period, this is the work that I do. And this is what you'll be able to study. How do you use all these different indexes? How do you use the Chapman wave? Well, I mean, what's the big deal about this? The big deal is even in the Master Trader Series yesterday, in the charts that we went through, we stopped counting, but there must have been at least 25 to 35. Oh no, it was way more than that. Peak Ds on charts that we were looking at. That's how potent the 4th highest peak can be. Even had one chart that went to 3 peak Ds. That is an extension. That is huge. So what I'm looking at here is that the dollar index went to a peak D from the 81.19 low back on as the index. 81.19 low on the 19th of June, runs up to 84.10. Excuse me, 84.10 24th of July, and then it comes down, and it comes tumbling down, it breaks the 200-period moving averages, breaks the left side, right side price time match, slumps all the way to 78.60, runs up to a peak D, pulls back, goes to an E, pulls back a little deeper, and now it's in a move that says this is either new leg B. Let me double check. Always got to double check. Yep, new leg B or F. And at this particular point with the stochastic at 78% and rising, it would not surprise me if this turns out to be a move that takes it to test at 80.40, 200-period exponential moving average. The moment it gets back above that, that's going to be very important for the dollar. It's going to be very important for everything that we look at, including the VIX, which is at a peak C, holding really strongly right on that 200-period moving average, trying to turn that moving average into some kind of a support. So don't get confused, a little bit of a mess that you see when I'm looking at my charts. The one on the left, I'm just moving it like that. The one on the left is always the daily. The one in the middle is the weekly, and the one on the right is the monthly. And you can see it's gone to leg B in the weekly. And if I drag the VIX volatility index over in this monthly chart, which is stupendous, look, from 9.39 back in December of 2006, what did it do? You know how potent the peak D is? It goes to peak A at 37.50. No, it goes to peak A at 21.25 in March of 2007. At 37.50, it goes to B in August of 2007. 37.55, a higher high. For January of 2008, and pow! 89.53, October of 2008, and then it plummets down to the 15s, 14s, 13s, and back to the 13s in the last couple of months, and now it's at 18.49. The volatility index goes to 19.5, 20, and then starts to trade in the 20s. Be careful on the downside. First caller, we've got Michael in New York. Hi, Mike. How are you?
Good. How you doing?
Very well, thank you.
Before I get to my stock, did you notice Joseph A. Banks, the commercials now, they're giving away a smartphone?
I did not know that. And
Yeah.
oh, my goodness, Joseph A. Bank. And now it's starting to take on one, and it's been on my list. I sort of moved it over the list because I have so many shorts at this particular time in my opening call. I just didn't know if I could add any, but believe me, I don't see how Joseph A. Banks can keep up No, it's Joseph A. Bank.
Right.
Clothiers. You got to say bank clothiers. It's not banks, it's bank. So, yeah. Okay. So, unbelievable. It's underneath the 200-period exponential moving average. I believe it's made a major top at 57.14 back in May of 2011. It's making a dreaded H pattern and now a little M pattern. I'm going to watch it closely. Hey, thanks for reminding me. Right here it goes, back on my list in red.
Okay. I just thought that was funny.
It is.
The stock that I want to look at is Qiagen, Q-G-E-N.
K-G-E-N?
No,
I mean
Q.
Q-G-E-N?
Q is in, meaning.
Oh, you know what? I have not done this one. I actually remember it from a while back, but I don't think I ever notated it. It's ABCDE, and that was the major top back in April of 2010. Round number 24. Did you see that?
Yeah.
Good. 24.00, round number, all-time high. Oops, wrong color. Let me go to yellow so you can see what I'm doing. There it is. All right. Now, I'm going to look at the chart, and I'm going to guess. And my guess is that based on the monthly chart, which is an ABC, and that's underneath the previous major high, so this could easily fail because it's under 80% in the MACD. Stochastic and MACD are in the stochastic, and the stochastic and MACD in the weekly chart are A. Oh, I just have to check that out. I'm pretty sure it's an A. That's an A, 1467, 1470. There it is. A, B, C, D, A, B, C, D, E, Doji high. Everything about this says that it wants to go and test the 15.90 area. It's at 17.51. When a company comes out with a name, I have trouble saying, or a very long name like that vitamin company, Cottage, whatever it is, you've got to have about 5 names in the title. I always say, be careful. So Qiagen, I bet that's how you say it, Qiagen, or Qiagen. NV, so this is from the Netherlands, I guess, makes a doji high, and now it's pulling back. Now, the daily says, let me just do this really quickly. From the last peak, it went A, B, C, D, peak E with a silent doji high bar. I think it's going to make the dreaded H. It's going to turn around and break 17.08. My guess is that you are looking at this as a potential short.
Actually, I'm long, and I'm worried about it. I want to know whether I should sell some of my long position.
Okay. I'm going to make this real easy. I don't know the reason for the two gaps. I don't like gaps like that, although I'm doing a study now that shows that major gaps to the downside can very easily get filled, and the look-back periods, you won't even know that there was a gap behind because it goes so high from the gap. So many of stocks have done that, and now on the reversals that we'll be seeing over the coming weeks and months, you're starting to see them turn around and start to fill those gaps. So I don't know if it was an earnings. What do they do?
Molecular diagnostics.
I was going to say, it looks to me like the medical field.
HPV test, for women.
Okay, right. It looked like the medical field because of those gaps to the downside. 18.67 low on the 10th of October. The high is 18.54 on the 11th. Then it fills the gap and it plummets down, and it goes from the 1825 level low of the 18th of October, and it gaps down to 17.84 high. So that's actually that's an 80 cents. That's pretty big. And now the question is, will it fill the gap? I don't know what the reason is for the gap, but when there is a history of a stock starting to produce gaps that don't just getting filled is one thing. I want to see them get filled, and then when you look back, you don't even know that there was a gap because it's done so well. Yeah, this is what I'm looking at. Are you long and strong, or you're long and you're not? It's underneath your average buy price.
No, it's been a long-term holding.
Oh, okay. If it's a long-term holding, that's a little different. It's not a little different in the price, but it's a little different in the strategy. And let me explain what I'd be looking at. There's almost, I can't do it here. Yes, I can. I'll do it right now. There's a left side, right side price time match, and that price time match goes to right. Let me double check. I'm going to be very conservative about this. I'm going to extend it out rather than make it shorter to the most obvious point. And now I'm going to color that in green. I'm coloring this one in red. And new. Okay. Now, this is what I'd be looking at. If you are in this position for the let's call it the intermediate term, and so far it's doing okay for you. When we come back, I'm going to just sum up exactly what I'd be looking for, and I'll tell you what would be a big concern of mine and probably of yours, and certainly if it closes under 17, that would be the start. But now let's also look at both sides. I'll be right back with Michael in New York and John in Philly. Oh, and Ilko in Boston. Very good.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. I've got a bunch of people online, so I'm going to go back to Michael in New York, and he's looking at QGEN, QGen, and it's in the medical area, and this is what I wanted to say. There is a particular pattern. In fact, we spent almost all day yesterday in my Master Trader series because it's such an important new innovation in the waveform. It's called the Chapman Wave Flat Base Restart. And one of the clues and how can you identify it, which I did as I was doing it on the black chart behind. Using it as a background. Now I've got the white one because I wanted to show it. And it says that there was an alternate counter and made a peak D top. And the peak D top says no matter what happens, how high it goes, or if it's a flat base restart, you're going to go to a D or an E. And when it comes down, it plummets through the starting point, which is 18.26. That was on the 13th of September. Then at some point it has a retrace just to try to go back and say, hey friends, I forgot my hat. I'm on my way out. Bye. And then what happens is it bounces back into the arch and then plummets to an even lower level. That's where all the information is really important. Has it gone towards a key moving average? In this case, the 200 period moving average, which is at 1708. So, Michael, I'm going to suggest have a look at this chart. I know that you know quite a bit about the Chapman wave, so have a look at the chart because it's going to give you all that information that you've been through, as well as this the Chapman wave flat base restart, and it also shows you that there was a peak A minus right right shoulder failure, and now it's trying to rally, and it hasn't filled the gap. My biggest concern, not the upside, because you know what the potential is on a fundamental, etc. level, but on the downside, my biggest concern is that the big gap that it had, like an island reversal way down in the 16s, that gap wants to be just revisited.
Yeah.
So all I'm going to say to you is that if you've got a longer-term perspective, some part of your position, you don't have to do it now. It's pulling back a little bit. It could do it even by the end of the day, by Monday. But please, if it takes out the 17.14 low of a few days ago, be prepared that it's going to probably bounce around again, because there's a platform there, and there's a 17.08 200-period exponential moving average. But that's where you might want to say, I'm going to watch it carefully, because some part of it might have to come off. What you want is by Tuesday afternoon, Wednesday morning of next week, for it to take out. It doesn't even have to close it. It just has to take out 1773 to say, hey, I want to try and fill the gap, and that starts above 1784. That's my shorter-term view. The intermediate-term view on the weekly says that it's made a peak E, and it's a very sharp pullback, that even if it rallies, it still wants to come and test. And a lot of the evidence just says that it wants to test down to about 1590, the low of July, the week of the 27th. So I think upside is limited for now. I'd just be a little careful. Maybe take something off. You can always put it back. If it forms a base in the 15.5 to 16.5 area and starts to rally, you can immediately put back that amount of money. Hope that helps you, Michael.
Yeah, thank you very much.
Thank you very much. Let's go to John in Philly. Hi, John. How are you?
Basil, thanks for taking the call, sir.
Absolutely my pleasure.
Say, Basil, wanted to ask you, both on the TLT and silver as measured by SLV, both.
Correct, yep.
Both came down on the daily.
Yes.
Hit the 200-day exponential moving average and bounced off. What do you make of either of those two, if anything, sir?
I do make something of it. And what it means is, I talk about what's so beautiful about it. You can use Fibonacci's, you can use Gartner's, Tigers, and all that. Those are fabulous tools. But if you look at certain moving averages, and we spent a little time discussing this as well yesterday in the Master Trader series, we were looking and talking about moving average. And what I'd said is, you do not need a 200-day look or a 200-bar look back when you're up at the 9-period moving average. But when you start to break down or you're going up, suddenly that becomes important. And why does it become important? It becomes important because it's its own internal look-back period. It's not using some golden ratio or anything like that, which has its place, absolutely. No, it's saying the TLT, 200-period look-back, with the most emphasis on the last day's close, has 121.07 as the exponential moving average of importance, and it's tried to break away from it on the upside a number of times. It's acting like a magnet now. It says that it's in a trading band with an outside limit of 124.80 on the upside and 118 on the downside. And in between that, this rectangle formation can continue for quite a while. If you look at the GLD has not yet tested 160, 164. That is my target. 162 to 161.30 is my target on the GLD. If you want to hold on, I'll go through the others. Do you want to hold on?
Thank you.
Okay, we'll be back with John in Philly, Ilke in Boston, and Mike in Ormond Beach. Hope you can all hold on, because I want to talk exactly about what you guys have there as your questions. I'll be right back. Basil Chapman, Dow's down 10, S&P's down 3.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. Dow's down 10 and S&P's down 3. And we're on with John in Philly. So, John, what I want you to say is, in the GLD, the pattern that I'm looking at is that the 9-period exponential moving average, which was fantastic support all the way up, except for one gap down bar, which already set at peak D. If you want to get out, that's fine. And all it did is it went slightly higher from 173 to 174.07 to E and F, as the technicals were just failing horribly, and that was on the 26th of September. Otherwise, the 9-period exponential moving average, I can't believe it, all the way from the 16th of August, not once did the GLD close on the daily basis, close below it, except for that gap down. The very next day it said, oh, I don't like that, I'm going back up. Then it ran out of power because the technicals were failing. The technicals are still very weak, and I suspect it's going to make a little dreaded H. Sometime next week it'll test 164.60. If it takes 164, if it goes to 163.90, then I can't say 100% sure, but that candle, that big, huge candle of August the 31st, that's the candle that I'd be looking at, and at least to get into the body of it, and that would take it down to 160, 165. I'm wrong if by Tuesday afternoon or Wednesday morning of next week it is closing, it is up, it doesn't have to close, but if it touches 168.45, the high of the 19th, I'd have to say, this is just a sideways consolidation at this particular point. That's what I'm looking at. The final one is, I know that you want to know about the SLV. SLV hasn't even been able to go above the 9-period exponential moving. What was support where it walked the 9 EMA, now the 9 EMA is a roof, an umbrella, a resistance. So I'd be very careful right now. Short-term trade, just a quick trade, fine. But everything about this says, this whole gray area that I've got, there's a measured move that I've got here that you can see if you're looking at Tiger TV that I've clicked on. That everything about it says, hey, be very careful, because if, in fact, the 200-period moving average at 30.41, and the SLV, the iShares Silver Trust, is at 31.22 right now. If that is taken out, then there's a very good chance it's going to move down, and it'll test probably the low bar of 29.28, the low of August the 30th. So I hope that helps you. Thank you very much for holding, and thank you for calling, and great questions. Let's go to Ilke in Boston. Hi, Ilke. How are you?
Very good. Basil, how are you?
I'm very well, thank you.
How was the class?
You know, I was upset that you went there, because all those questions that you've asked me were exactly what we dealt with, and in incredible detail. So there are from the instant restart, there are 4 variations. There's the instant restart, the unconventional instant restart, the flat base restart, and the unconventional flat base restart. And then there's another one that I've been working on, and I actually just touched on it yesterday, but I'm going to do a great deal more work on it. And it's like a diamond pattern where the instant restart actually goes to lower lows, and yet everything about it says it's going to go to a D and fail. There's no other wave count. So it was very exciting.
I was so bummed, because this is like probably the first one that I missed, and it's just, I never like to miss your...
I always enjoy having you. You always add tremendously to the class, and we too missed having you. But
next
folks,
time
this is, folks, this is we're talking about the level 2. This is where, in fact, those people who come to my level 2 very often have done 3, 4, 5 of these, and we just have a review, and then we go into all the newest stuff, and it's always fun. So, Ilke, you wanted to ask me about what?
Well, the dollar that you were looking at, the daily, but
yes.
Later euro with the flat base restart on 10 minutes. So the dollar, don't you think that the price movement for the technicals is not really convincing of the strength up move?
Basically,
I'm just saying that the price is weaker than it should be, and the stochastic is already moved. So
let me explain to those folks that are only listening, but they aren't able to see the charts. They don't have them in front of them. Folks, what we're looking at is the dollar DXY. That's how I get the dollar index. On your software package, there might be different symbols to get it, but it's the dollar index. What's important about this is that the MACD, the moving average convergence divergence, say, come on, I'm looking at my cell phone, why it's not updating, has had a fabulous move in the MACD, and it still looks very strong. Although it's underneath the 0% line, it's still very, very strong. The histogram above the 0% line of the MACD is green and still very strong. The stochastic has gone all the way to 78%. And what Ilke is saying is, when the technicals were lowered down and it went to peak E at 80.19, the fifth highest peak from the 78.60 low, on the 10th of October, that high at peak E, 10th, 11th, the technicals were moving up, but now they are way stronger, and the price is only just a little bit at 80.27. It's like 6 cents higher. You see, Ilke, my belief, and so far I have not been proved wrong, but I really haven't been proved right on I can't document that I'm proved right, only other than looking at the chart of the dollar index. I believe that the Fed is manipulating is a very negative term, is forcing the dollar down, and that the strength is wheel spinning. In other words, they've put it into first gear, but the torque that you would expect is just not there. It hasn't even built momentum, because it will only build momentum once it's above the 200-period moving average of 80.40. So as I'm looking at it right now, I agree with you. And if you even look at the volatility index for the amount of decline that we've had in the market, and the volatility index hasn't yet gone back over 20, and the market's down about 550 points in the Dow, about 50-something points in the S&P from their recent highs, I am a little surprised. And if you put that together with the TLT, which I didn't discuss with John, the TLT also is holding okay, but it should be that the bonds should be much higher. So what I think I'm looking at here, I'm trying to assess it, is that the dollar is having a rally, but you can't really tell because it's being pushed down. It's like a little, what do they call those little things at the fair that pop up and you keep knocking whack-a-mole? It's like whack-a-mole. Every time it tries to get up, bam, it gets smacked down. So that's my reasoning there on the dollar. At some point, it's going to misfire. They're going to miss the head. They're going to hit the piece of wood on the side. This thing will have a chance to pop up, and the dollar will try to get to maybe 81.67, the high of the 5th of September. But right now, I agree with you. So, but if you look at the euro, EUR-USD, EUR-USD, there's a difference. The dollar, the euro-dollar currency pair is pulling back and holding the, I shouldn't say difference, I meant that there's a difference in that this is coming down and the dollar's going up. But the euro is also treating this 200-period exponential moving average as if it was a magnet to come down to, and then a propeller maybe to try to go up. But even if it goes down, it says, this is a very important level. 1.2877 on the euro dollar is at 1.293. So to answer your question, I think your focus on the dollar is correct as a focus when I talk about my three bears, VIXI, Bondi, and Dolly. But they really are not giving you a heads up to say all systems are to go on the upside for these three indicators, and all systems are go to on the downside for the stock market. But if you look at individual stocks, you know, since about the second summer of the big move from the March 2009 low, we've seen corrections turn into, well, it was a little bit before, but we've seen corrections turn into rotational corrections. Now, that could say to us that there is no crash, especially if the media is talking about an economic crisis and crash, that there is none. But in fact, we're in a trading range and a stock selectivity that's really important. So if you're trading the euro or the dollar, I'm not sure right at this moment you're going to get the very big move that you'd like, but you will get the directional move.
But on the 10 minutes on the euro, do you see, is there a flat base restart on the 9:10 candle to 10 o'clock?
This is on the euro, EUR-USD, real quickly. AB, no. No, I don't see one. I just see V-shaped turnarounds attempted, and they keep failing.
No, I mean 10 minutes.
Yep. I'm looking at the 120-minute chart. Okay. Let me just do this. I want to do it a little quickly because I've got a bunch of callers. So let me just do this euro. Let me go to 10-minute chart. Find it, 10-minute. There it is. Here we go. 10-minute chart. EUR-USD. So it's A, B, C, D, E, F. Goes up. Goes A. Could that be? Yes. Yeah, correct. Okay. So what would happen is, kind of correct. It didn't go deep. The last moves from 11:30 have not pulled back deep enough to call it.
Basil, I mean at 9, 10, and 10 o'clock, those two candles.
No. That's not the pattern.
After the first D, the retracement, and then
A, B, C, D. It was way too high. You don't get that kind of pattern to the peak. That was just a plain old A, B, C, D, E, F. That was a perfect peak F top. No, Ilko, that was not. You know what? I'm going to produce some, and I'll give me an email, and I'll send them back to you. Okay? Then you can check it out.
Thank you very much.
Thank you very much. Let's go to Mike at Ormond Beach. Hi, Mike. How are you doing?
Great, Basil. It's funny that you mentioned the whack-a-mole. For 22 years, I worked for the company that invented and built the whack-a-moles, and I used to run their metal department where we built 90% of that game. Yeah.
Oh, man. And for years I could never remember the name of it. I would say there's that thing that, pops up and you keep it there. And then I'm even surprised I remember the name today. But it is so perfect because it represents the market perfectly. There are certain stocks that every time they try to rally, pop, they get hit on the head.
Yeah.
So
but,
you wanted to look at? I
wanted to look at the Dow, and I wanted on a weekly chart, and I wanted you to confirm from what I'm looking at on my charts. We made a peak E. Is that
so?
Correct?
This is the Dow or the Dow Diamonds? They're the same. Okay. The Dow made a peak E. It's going to close today, and there's a spectacular run up to 13,303. It's going to close underneath the 9-period exponential moving average decisively. Yes, you've got it exactly right. Folks, let me just explain for folks who are just listening. In the Chapman wave, the basic concept is to identify the most obvious low bar, which is 10,404 back in July of 2010. You merely count each successively high peak. That's the simplicity of this whole thing. You go to peak A at 12,284 in the week of 28th of October of 2011. Peak B, that doji high on the week of the 2nd of March of 2012 at 13,055. And then you go quickly to C and D, D at 6. The week of the 6th of April 2012, pulls back, and then it pops up in the pattern that I call the double top drop bucket pattern. There are so many of those that I've been seeing lately. In fact, I may have a chance to talk about one just now. At 13,338.66 on the 4th of May, it pulls back deeply to 12,035. That's a 1,300-point decline. And then what does it do? It runs up to new recovery highs, and it goes to peak E again, a fairly quick one. We had a question the other day. Is this a very... I had a question the other night when I was giving a talk at the Boston Investors Group. Is that a very good question? Was that a very quick A to B to C to D? And I said it is kind of quick, but it isn't very quick. But in fact, going to E so quickly, I think it is actually kind of quick. And that says, be careful, because there should be a test of the previous low of importance. In this case, it would be 12,977, 9,078, the weeks of August the 31st and September the 4th, or whatever that is. And what's most importantly about that I'm looking at now is if by the end of the day the Dow actually closes a little bit lower, it could drag the MACD lower, so that I have no choice but to put a down arrow in the weekly chart. First one since back in May of 2012 in the weekly chart. Mm-hmm. And I've got a peak F in the daily. There's that drop bucket pattern, the double top pattern that I was talking about. And the most important thing, I'm sure you're about to bring this up, is the monthly, right?
Yeah.
And that monthly is in leg F/B. I have no choice but to give it a preference of F right now, because that's just the natural sequence. So I'm not going to be able to do anything about the monthly chart because it's still in leg F. But the S&P, now this is how subtle this is. Your obligation is always to identify exactly the price point at the top and the price point at the bottom of the peaks and troughs. Well, the S&P could be making a peak F top this month. If it closes under 1474.51, that'll be F/B. B means that it's very positive because any pullback should go to higher highs. Oh, that sounded like the ring of the whack-a-mole. I just won something. Bonk. So does that answer your question about the peak?
Yeah, pretty much. I just wanted to so there's no possible way in the weekly we could go to higher.
Oh, no, you said... Oh, hold on. I don't want to just leave it like that.
Right.
Hold on, because that's a very good question. Mike in Ormond Beach, and then we'll be back with Nick in Oklahoma City, and I'll be right back. And as we go out, I did MR. I'll do it just when I close out.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
We've got Mike, and I want to finish with the DIA, but I also had a question of the Dan. The first question was on Amarant, AMRN, I believe is the symbol, which I just did, and AMRN. And yeah, be very careful. It needs to break to a new recovery high, because if it pulls back that 1132 level, then you got to be a little bit careful. So far, it's acting okay, but not great. That's Amarant. The next thing was Ram, and the Dan said peak C minus in the euro. Yeah, if charts form patterns, they form patterns over and over again. Look, this has got a peak C minus once, peak C minus twice, peak C minus 3 times, and now it's leg A up. So watch this real carefully. This one should try to hold a little bit better, but if it starts to fade here, that'll be negative. Now, back to our callers. We've got Mike in Almond Beach looking at the DIN, and what I said is the question, looking at the Dow, the question was, and it's a great question, is it possible to go to a leg C up? In other words, what would abort the downside negativity and make it positive again. Well, if it closes, no, it doesn't have to close, but if the Dow goes underneath 12,977, I cannot justify calling that any other thing than a peak E, and it has to now start a brand new buy mode, which it can do, go to A, B, C, D again, but I have to say that it's a negative connotation. So I hope that helps you, Mike. So now let's do this. We've got, Nick wanted to know, I'm sorry, Nick, I know that you're listening, but I didn't realize that you were in a hurry, but I'm going to do this. He wanted to know about MCP, which is MCP. He's back. Hi, Nick. Just yell you're here as soon as you come in. If you're in MCP, I'm not sure. I see nothing in MCP on the upside. I do see the downside. In the MCP, which is Monaco, just yell, Nick, if you're there. If MCP, which had a peak C minus, makes a B minus here by going underneath 10.45, I just say be real careful, because it's going to try to test the 940 level again. I just don't see any strength in it in the daily chart. The weekly chart is lousy, and the monthly chart has the Eiffel Tower straight up to a peak C minus, which is really bad in the monthly chart, and then down to a trough C, which will become a trough D, a leg D, underneath 940. Nick, you there? All right. Well, Nick, I can't hear Nick. I don't know if he's there. But Nick, I don't know if you're along it, but I would be very careful. If anything, I'd be looking at this if there is a pop-up. I'm not even sure if you need a pop-up. It looks to me like this is going to go down and test the 1045 level. It's at 1068, down 25 cents. I'm sorry. I just don't see anything on the upside. If it is, it'll be a news event that will spike it above 1134. I don't see anything else than that. So thank you, Nick, for calling. I'm sorry I couldn't speak to you now. I just wanted to go through a couple of things. I got an email about a stock which, I'd seen. I just never really done the work, or maybe I did. I just don't have. I don't have it. CYT. What is it again? Cytec Industrials, and I actually had notated it, but I had to finish it up right now. So it's making that double top pattern, which we've seen so often. And this double top, CYT trading at 68.78 in the daily, is in leg A, B, C, but it has to break above 70.707. Trouble is, if it breaks above that, I have to call that alternate count F/whatever it is. That's number one. But it's holding really well. It's a high-level consolidation in a market like this. I like the chart. If you're in it, hold it. A big test, if there is a test, will be 66.07. If it breaks under that, I'd say, get out. But the MACD is good, the stochastic is good. Good eye. Thank you for emailing me about that. And the weekly chart, I looked at this. There's no other way. I believe that it's going to 70.07. Above 70.07, it goes to leg C in the weekly. So, yes, it's holding very well. Good eye. Folks, Basil Chapman here. My service is the opening call. Please check the front page for my new, the level 1 2-day webinar coming up December the 6th and 7th. I promise you will get out of it just an incredible amount of information that you'll use every single day. I'll be back on Monday. Have a wonderful weekend.